Hello there, this is FairBinaryOptions.com, and I would like to discuss the US dollar Japanese yen here, as this currency pair looks to form a bullish triangle, which anyways I don't think that it's going to break today. What is the problem with this triangle here in this arrangement that you can see here? Well, the problem of it is that I suspect this is too beautiful to be true, first of all, as a triangle, and a break higher, even if it comes a break higher here on the B2D trend line, I don't think that it's going to be the final break. Now, how would this triangle in reality look like? The idea is that, or the key stays with, let me zoom in a bit, stays with the first wave here, as this first wave ends with a contracting triangle that acts as a reversal pattern, so on a lower degree, A, B, C, D, E. Now if you put this A and C trend line basically from here to here, so this to be wave A, B, C, it may very well mean that the D wave is not completed here, and we should look for a D wave in such a way that the triangle should still contract. So normally cloning this line from here, let's make it first a bit different, cloning this line and putting it in here would be will give us an approximate idea about where the D wave might go in order for the triangle to still contract. So this would be the maximum distance that the D wave should travel. Now that would make of a lower degree this move to be A, B, C of a lower degree, an X wave in here, and then a move in here. So this would be something like from here to here, and from here to here, a triangle of a lower degree, or the X wave if you want, and then to have the end of the D wave. Normally this should be labeled as like this: A, B, C, and then the X wave in here, and then to another A, B, C, D, E, and then the market to go for the E wave, and then the triangle to break higher. Well, at least this is how a double combination should look like for the D wave to the upside. That being said, head of the Federal Open Market Committee in the United States, I would say that whatever the outcome will be, it will be bullish for the dollar, but not decisive, as both the US dollar and the US dollar Japanese yen still need some time to consolidate. So I'm looking at a bullish triangle here on the US dollar Japanese yen, but that is not completed. Most likely for the next probably until the next meeting when the Federal Reserve is supposed to hike the rates, most likely the market will still consolidate. Now, what does it mean? Does it mean that the Fed cannot hike the rates today? No, they may hike the rates, even though it is not unlikely, but in the event of hiking the rates, the reaction will be even more bullish. I would say that most likely they will take away words out of the statement like patient or considerable time and so on and so forth. So give it more or less bullish tone rather than hiking today. It remains to be seen, but for the general binary option trading, would like to buy call option today with end of week and end of month expiration date. That means Friday, 2 days from now, when the US equity markets are closing, or if your broker relates to the GM dime, the option or the expiry date offered by your broker for Friday, end of day expiration date. So I am buying call options with end of week or month expiration date based on a triangle that is supposed to make another leg higher according to this analysis. It remains to be seen if the market will confirm the move. Thank you for being here. Bye bye.